Good day, everyone. All right, we're gonna start a few minutes early here, give people some time to get in. I'm gonna share this link in the Discord. I'm not sharing this on Twitter, although people will be able to come and watch the recording. I want to direct this live stream to everybody here who's participating in what we're doing in the Discord. I hope everyone's doing well. This is probably going to be a long live stream. We're going to be covering a ton of topics. The goal with this live stream is to basically have it sit in this absolute alpha channel in the Discord as a resource for traders of all levels to understand and bring together a ton of concepts. I really want this live stream to be transformative. So I have some ideas that I'm going to be covering. We're going to be going through a lot of concepts. I'm going to be building on the concepts I've covered in the Discord. Although you won't have needed to watch these Mark Douglas videos, it'll be helpful if you have already, including these videos. But I'm going to be building on the concepts here. We're going to be looking at some live charts, but it's not going to be the primary focus of the live stream. I'm telling you now that whether you're tuning in now or you're watching the recording, you're listening to this, sit down and watch this when you have some time to pay attention, take some notes, and be really open-minded to learning something new or completely changing your perspective on the market. I'm going to give a few more minutes before I dive into the core content here. Like I said, I want to give people the opportunity to join and kind of start on time here. I will say, if you haven't already, whether you've taken the time to watch those Mark Douglas videos or not, come and read through some of these comments of people going through their takeaways from those videos. Very insightful. It's nice to see how people are applying these concepts personally and really offered some additional insight. But really encouraged to see this this type of reflection, and definitely sounds like these videos are transformative concepts for a lot of these members. So, all right, to keep in theme with this Mark Douglas seminar, I'm going to be building a lot of the we're going to be looking at a bunch of charts, and I'm going to be building off of some quotes from Mark Douglas as we work through some concepts here. Welcome, everyone. Thank you. Good day, good day. So if you watch the Mark Douglas seminar, you'll know that there's a big focus on trading psychology. And the whole idea is overcoming the emotions that are associated with uncertainty and not misallocating euphoria and greed to certainty. So here's a great quote. The market doesn't generate consistent results. Traders do. The best traders aren't afraid. They've developed attitudes that allow them to remain disciplined, focused, and confident despite the uncertainties. If you can learn to create a state of mind that is not affected by the market's behavior, the struggle will cease to exist. I just kind of bled some quotes together. Now, one of the biggest challenges you're going to face as a trader is dealing with the probabilistic nature of the market. And these phrases get thrown around a lot. Like, oh, it's a game of probabilities. But there's mathematical certainties that we can use to describe probabilistic outcomes. So what we need to understand, just starting off, is that what we're dealing with uncertainties is 100% guaranteed events. Essentially, statistically 100% guaranteed events are going to arise in a probabilistic environment given enough samples. But what we don't want to do is misinterpret small sample sizes as indicative of any kind of trend or probabilistically significant idea, right? So this is actually something called the gambler's fallacy. And it's people misinterpreting small streaks or clusters as indicative of a larger trend. So the simplest way to describe this is, let's just imagine you have a coin and you flip it 3 times and it lands on heads all 3 times. The gambler's fallacy would be to say that if you didn't understand what the coin was, oh, this coin has a 100% chance to land on heads. I've flipped it 3, I've got this small cluster, this small sample size, and now I know it has, but you don't understand that in small clusters, a 50-50 chance, 3 is going to come up a lot. And it doesn't tell you anything about the nature of that coin. And in the same way in trading, 1s and 2s and 3s, whether that's wins or losses, are going to come up a lot. And they don't tell you anything about what you're doing. You can't say, okay, I'm going to try this 2 times. And if it works, I'm going to go big or keep doing it. And if it doesn't work, I'm going to stop doing it. This is a complete misunderstanding of the statistical significance of different events. And so what we're going to do is we're going to go through a bunch of charts. And we're going to actually work through this problem of probabilistic uncertainties in the market on live charts and historical charts. So here's a great quote from Mark Douglas. The market rewards those who act on probabilities, not those who gamble on outcomes. Let me pull up this other screen here. Slide this over here. So what I want to do is I'm going to go through Doge, XRP. I'm going to look at some losing trades, some winning trades, and I'm going to look at how I was approaching the market at this time, because there are losing trades, there are winning trades, and what happens to traders is they get really they're not accepting that losing isn't a problem with your system. And even if you're an experienced trader listening to this, you're going to say something like, I understand that. But even experienced traders, I find they are so focused on avoiding losing. And, there's this idea that whatever you're focused on is what you're going to do, right? If you're so focused on, I don't want to round trip my trades. I don't want to lose another trade. That's all you're going to do. You're just going to lose round trip, lose round trip. And a big part of the struggle that people have with execution, in my opinion, is they don't understand why they're doing anything they're doing. So let's say, for example, somebody's trading into some of these ideas we're going to go over on Doge, and they're taking the exact same trades I'm taking, but they're losing money. They're not holding any of these trades. They're, for some reason, maybe they're shorting into this instead of holding their long. Maybe they close their long here and then start shorting, and we're going to long back into another test of the trend line, whatever it is. And they're not actually understanding what the whole premise of the trade is, what the premise of the structure of the trade is. And if you don't understand why you're doing anything you're doing, it's going to be really hard to do it. Your edge is only valuable if you have the discipline, and this is a quote, I'll add, and understanding to execute it. It doesn't matter what you understand about the market if you can't implement the things you understand about the market, right? And so this is all about understanding execution, why you're doing anything you're doing. One more quote here, and then we're going to go into specifics. If you find yourself angry or frustrated with the market, it means you're fighting it, not trading it. Okay, so there's never a reason to be upset about anything that happens in trading when it comes to the outcomes in the market. Those are unknowable. We aren't expecting anything to happen, any specific thing. We're expecting only that something is going to happen. And to get angry over new information from the market makes zero sense. So what I want to do is I want to go through how I was trading Doge. I want to look at trades on an individual basis. This looks stupid. This looks, whoa, I can't believe this worked. This looks dumb. Why do you do this? There's no way this is going to work. Whoa, it did work. And what would happen if you're just caught up in the details of individual trades? You could just say that the biggest mistake that a trader could have made in this whole thesis playing out on Doge was not being willing to take more losses, not trading this more aggressively, not taking more longs. I took a lot of longs on the way up. And if I made any error here, it was being too risk averse, right? Trying to avoid taking more losses. Now, that's not to say that's always going to be the case, but we're going to focus on winning trades and accepting losses. All right. So let me go here. We are just going to go through months of just Doge updates. I've typed in Doge as the keyword here in the members Discord. So I was longing Doge towards all-time highs from 9 cents. And all I wanted to do as this trade progressed was add to longs. And to me, to trade this idea, I already understood everything. If this idea is going to play out and I'm trading towards it, everything is a good long. It doesn't really matter. I'm going to take some losses. I'm going to take some wins. And so this is back in September. I just said my primary bullish ideas, I'll be trading on alts rather than Bitcoin. I'll also be looking for this on Doge. So there's a lot of updates on this whole idea of this breakout, trendline breakout, continuation on Doge. But early on, my entire idea for the bullish cases was, well, because I had a bearish case on Bitcoin with a move up towards 67K and then maybe a bigger rejection, but I was willing to trade into these really bullish ideas on Bitcoin, or sorry, on Doge and XRP. And so I just want to show you what types of trades I was willing to structure down here. So this trade here, this is when we were around 10 cents, willing to take some risk on a breakout here locally. This is the 15-minute chart, willing to take risk, sweeping back into these lows. Everything here are 55, 60-yard trades. All I want to do is add into. So I said I'm taking this long here. So let's go to the chart here. And my point is that this trade lost. I'm willing to take this long. I'm willing to take this long. I'm in this long. And all of these trades I'm trading towards all-time highs. Now, what's going to happen here for a lot of traders? If you're a new trader, you're going to take this trade once or twice into this whole idea, and you're going to get frustrated. You're going to get frustrated by this, and you might even start shorting this, right? Or you're not going to take this trade. A criticism I've gotten when I use the phrase, I don't care which of my trades win or lose. I take trades and I manage my risk towards ideas, right? Because the reason I don't care is because I can't care. I don't know what's going to happen. All of my successful trades are me just trading technical ideas that I believe have an edge. And believe is an important word because there's no guarantee in a probabilistic environment that the next 10 trades are going to produce any winners. I have no idea. I have a belief that the market's going to continue to behave the same way it's behaved for the last 100 years, generally speaking. And in this chaotic environment, if I can remain disciplined, I can produce an edge out of the market. And the reason I'm going through these old trades is because I want to show what this actually looks like in action. And what I did here is, this is just a conversation in the members Discord. So I just said, let's use this example on Doge. Would you say that the sweep of the lows for the swing idea is a good long setup? And there's a technical reason for getting long, question mark. What is the thesis? Why is it a good long? What makes this trade, sweeping these lows at 10 cents? This is this sweep. This sweep here. What makes this trade good? And what makes this trade bad? Okay, so let's go back to the Discord here. So I say no technical reason for getting long here. This is just quoting, imagining someone saying, this is a great long setup. This is no technical reason for getting long. But why? But if we then say there's no technical reason to get long on Doge, as soon as it's rallied, then why is the person who is long from lower in a great long? And why is the person that is not in a long, why do they have no reason to long now? Because prices rallied from 1037 to 1071 and your targets are all-time highs. The reason to be long has happened. Now it's a matter of structuring some reasonable ideas to get exposure. You can't enter on the sweep. It's already happened. But you can structure trades around the thesis of the sweep. They just need to be structured differently. And so this is building on a broader theme. And we're going to see this in XRP and ADA and continue to see it on Doge, which is, I don't just want to hold a long from here. into this thesis on Doge, rallying hundreds of percent, I want more exposure. I want to be as long as possible, as safe as possible. And so the way I do that is by longing and invalidating my trades with local structure. And the local structure isn't to say that if this trend line breaks down, I'm closing all my longs on Doge and I don't think there's a bullish thesis. It's simply to say I want as much exposure as safely as possible. And I'm using the idea that this market structure is relevant and could produce a higher probability outcome in a trending environment to put on more risk. And we're gonna go through these updates, okay? We're just gonna scroll through them. Okay, we're gonna flip to the next page. So pretty much everything was a long for me on Doge. Everything was a long. I want to go to a specific long setup here. All right. So the whole idea was at 14 cents, trading towards these 42, 43 cent highs as a major idea. Maybe looking for some retracements. There's some ideas down around 26 cents. We're not going to get into the exact ideas on this live stream, although we might cover them a little bit. But the whole idea is I'm open to. I said I'll share some lower time frame thoughts on Doge next week, but looking at this structure on the higher time frame for now, and open to no more deep pullbacks between now and all-time highs, depending on what happens at some local resistance above. And because of that, I was willing to structure trades like this. So this trade on the chart at the time, I didn't actually end up taking this trade. It looked something like this. And I did take this trade, and we're going to talk about this one as well. It's just saying, looking for strong continuation of a breakout here. Even this trade up to 42 cents is a 25R trade. This is a 25R trade. So I'm getting 25 to 1 on my risk. I do not care if this trade works. I don't care if this trade works, this trade works, this trade works. I care about trading into this thesis. I could take 58 losses to get into this trade and be break even on this thesis, right? So it's just about breaking down this barrier that avoiding losing these trades matters at all. You can't avoid losing trades. The more you try to avoid losing, the more you're going to lose. You accept that your trades can lose. You're not expecting trades to win. So for example, if I long here and this trend line breaks down, am I angry? No, I don't care. I am looking for this opportunity to put on this trade. If this trade doesn't work, I don't care. I'm just going to look for new opportunities to put on similar trades. And obviously not every trade is structured around a trending environment, but here obviously I was trading towards a trending environment. So just showing this trade here. I said here the initial idea would have held up nicely. Going to keep an eye on Doge into the New York Open. I have several reasons for thinking Doge could not only outperform many alts, but going up, even if Bitcoin and other altcoins go down. For now, Doge is quite strong against everything else. This was several months ago. And I'm going to continue to use it as one of my primary altcoin long plays. So that 14 cents. And this is what I continue to do. I'm going to try a sweep of these daily candle lows. As we took those lows, I took that trade. And I don't care if these trades, why don't I care if these trades win or lose? I'm just looking for exposure to the idea in a technical structure. I'm open to the idea being wrong, right? I'm open to the idea not working, but I just want to put risk on into this trend as reasonably as I can. But reasonable is taking into account that the targets are 150, 160% away, right? So how I can structure trades into a strong uptrend gets pretty flexible. So then I took this trade. Again, this is at 13 cents. And so this is just what I want to point out. This looks like such a, in a way it looks like such a mess, right? This was a winning trade, but it looks like a mess in hindsight because the way I traded this is this. I longed here. I took profits here. We rallied 5%. When we rejected below these highs, I took profits and I put my stop at entry to hold the rest for potential rally. I got stopped out over the weekend and then price rallied. Was I angry at the market here? No, I don't care. I'm just going to look for another opportunity. What was the next opportunity? This is just me. I'm updating here, taking profits. Very clean move on Doge, watching GP here for potential TP1. You know, you can feel good. You feel good that you lock in profits on that trade. But an undisciplined trader would see that price ran, 8% below. They put their stop at break even. It ran 8% below, but then they look and see it rallied 150%, and they say, I should have just held through the 15% drawdown. You don't know that price is going to continue bouncing here, obviously. You don't know that this is going to happen. As soon as I came to this breakout here, I'm just planning my next trade, which is the move down to this trend line. I have this broader idea, and I'm just looking to trade into this uptrend, continue to trade into this uptrend. As Doge travels towards this intersection here, I update. Doge is approaching my first level of interest for a long. It's kind of interesting too. This is the Pico low of XRP before multi 100% move right above this. All right, so this is what I want to point out. Is people are going to get really frustrated as new traders. Let's just say they're blanket copy trading. Every loss is going to feel really frustrating, and every winning trade is going to be really hard to stay in. If you're a new trader, it's really hard to understand how hard it is to execute a trade from start to finish. If you've been trading for 2 years, you might tell a new trader, they might say, hey, I have this great idea. I'm going to long this and then hold it to here. You'll be pretty confident that it really doesn't even matter what happens. It doesn't even matter if the idea works perfectly. You'll know it's going to be really hard for them to execute that trade. It's going to be hard for them to hold it. It's going to be hard for them to not stop it out early or to take the loss if it doesn't work. And so these trades are really important to understand in the broader context of the idea. This trade, again, I didn't take. We got a rally, would have got stopped out. This trade stopped at break even, and then this is this trade into the trending structure. And the trade right above it, by the way, on XRP, was down at the lows here. We're going to be looking at XRP as well. Now, I was saying here, don't judge me for taking this long towards all-time highs at 50 cents, 51 cents on XRP. I still have that long. If we are still in this range a year from now and I become an XRP maxi, stage an intervention. Now, one of the reasons that that's kind of funny is because I already round-tripped this long. Trading towards the same idea. And we're going to see that when I go over XRP. I already round-tripped along on XRP, trading towards all-time highs. What I do when we came back to this, down into these lows, I just traded the same level and the same idea. And I traded up into this uptrend as well. But what I want to point out, again, this was actually the Pico bottom of Mudang as well. This is what's funny about, I actually didn't realize, I didn't remember that all three of these trades were just back to back. This was the Pico bottom of XRP, this setup. This was the Pico bottom setup before multi-100% moves. And right below this is the Pico bottom of Mudang, right before a multi-100% move up. All three trades in a row. Now, I don't know for certain, but I'd venture to guess that there's a lot of Discord members that took these trades and didn't hold any of them. I'd just venture to guess. You know, you join, maybe you hold for a 10% move, a 15% move. But it's really hard with no experience, even when trades are going straight up, to hold them. Right? So after we start rallying, after the chart starts looking like this, I just say, if you search mentions by my name and Doge in the Discord, you'll find all of these setups. Long setup after long setup, looking to add Doge, targeting all-time highs. You'll find other long setups that got front run. You'll find some that didn't work. You'll find long after long after long after long. Not to say everyone worked, but I was clearly working to get into more longs before this rally. This is the stage of Doge where those longs pay off. If you want positions towards a thesis, put in the work for them. Right? And this is ultimately this thesis just playing out perfectly down up into this channel, the 42, 43 cent region. And I was just updating here that I am looking to take profits and still will look to continue to add back into Doge at the time on retracements, but laying some structure for them. But what I want to point out here is how many losses, if you're managing your risk, so let's just say you're risking 1% per trade on any of these trades, how many losses could you have taken and still printed massively if you just found one of these, one trade in here? You could take 25 straight losses and catch one 50R trade and be up 25% on your trading account. And so what I want to point out is I longed into these uptrends on Doge and I longed into this uptrend, and while the market is trending, I'm going to keep trading this type of trending setup. This got stopped out. I take the stop, and now I'm looking at this as a range. If we form another trending environment, I'll just start looking at it as a trend. We're going to look at XRP. Again, this was the peak of bottom low, but longing into this uptrend. And why was I so active in the Discord looking for these long setups? Because if there was a really bullish thesis on XRP, there was a really bullish thesis on Doge, and if it's going to play out, the type of thing you would expect to see is a strong, grindy uptrend ending in impulses after impulses. And so I'm happy for the opportunity to long into all of this, into these retracements, into this uptrend. I do not care. I'm happy to put on these trades. I do not care if they work or not. I'm just happy I have the opportunity to trade into this trending structure, into this really bullish idea. I'm not upset if the trend line doesn't hold. I don't care. I'm just going to look for new setups because I understand this is the type of market structure I'm looking to see before a big impulse. And the risk reward of trading a setup like this allows me to put on the trade, accept the risk, without knowing what is going to happen. I want to just go to here really quickly. So I talked a little bit about these in the public Bitcoin updates channel, which is to say that I just took this loss on ADA. To me, this trade was no different than this long on XRP. I took it for the same reasons. I have no different expectations for what's going to happen. I'm willing to be long into the strong uptrend and take trades into that uptrend for the same reasons I was willing to do it on XRP. I have no expectation that the uptrend's going to hold. My expectation is that it either will or it won't, and if it doesn't, I'll cut the trade. That's it. It either will or it won't. That's the definition of this setup. It either will hold or it won't. I have no expectation of one or the other. I'll hold the trade if the uptrend continues. I'll cut the trade if it breaks. But I want to trade into the retracements, into the uptrend. And while they exist, I'm going to trade it. And that's it. I want to find a specific comment here. Basically, every day in the Discord was just me spamming trades into this uptrend at the time, looking for something like this, right? We have this strong uptrend. We can get a quick move up to 94 cents. There's no structure there. XRP looking like it wants to send. I want to go to this trade because what I'm doing here I got front run on this trade here on XRP, wanting to trade into this trending structure. This was actually what ended up happening as we formed a new trending structure. Got front run on this. And then I took this trade. And what does this trade look like on the chart? I'm going to break this trade down a little bit more. Looks something like this. Into this new uptrend, trading into this. We have a continued uptrend holding afterwards. And even on the 1 minute time frame, so here's what I just was pointing out. So although there might be TPs along the way, the final targets for these longs are in the $5 to $8 range. So amazing risk reward if we rally into a strong uptrend. Big horizontals above to test. Have those marked out. This is what the trade looks like here. And this is our 1 minute chart. This is at 68 cents. So we have this 1 minute uptrend. We have a breakout retest of this trend line. We have a local uptrend on the 15-minute chart. We have a local uptrend on the 1 minute chart. Price literally directly sent right after these updates. We rallied up to this new high, came back, retested the level into the uptrend and continued higher. All of these uptrends, just pointing them out, trending structures, trending structures, trending structures. I just need to be willing to put on the risk and manage the risk and accept that anything can happen. And even here, this last ad, looks like this. So it was a little tighter than that, but this is the idea. Again, towards all-time highs. And what my point here is, I was no more confident that this trade would work than I was in the trades that didn't work. There's nothing I thought about this trade that made it any more special than trades I took that didn't work. I just put on the trade and managed my risk. Accepted either outcome. And until you can accept either outcome, it's going to be really, and a big part of this was accepting round trips. That was a big theme in my updates as well, saying, hey, I'm holding this. Here's I'm just going to go to the updates because it's important to understand what this. Once you're in these trades, and in trades like this, you're going to experience what it's like to be in these trades just by feeling what it's like to be in trades. I mean, ultimately, you need to be trading to get experience, and that can be with paper trading. You need to feel what it's like to be in this trade because this trade just feels, it looks like this would have just been the easiest trade in the world to take, to be in, to hold. But there really is no easy trade. Psychologically, right? Psychologically, there's always going to be a reason to not take the trade, to not cut the trade when you should, to not hold the trade when you should. We're just going to skim through some of these updates here. This is along with a Bitcoin update here. An XRP. Again, down at 70 cents. Just saying I'm long anything. I'm longing everything and anything into this trend line. And as I shared this idea for this last idea for longing here, this is an important part. I said, I'm cautious here for a breakdown and a sweep of lows on XRP, but I really can't invalidate my trades with the whole thesis being grinding into this uptrend and impulsing. And this, the point is this ends up being the peak or low, but I don't know it's going to be the peak or low at the time. I just have this thesis I'm trading towards, which is grinding into continuation. And I just shared the update that this is the trend line I'm watching. This is what I'm saying. I'm long anything into this. And at the time, these rejections look kind of scary. And the reason they look scary is because they're the types of highs, major highs that form. Doge had a few of these as well. But again, I'm just longing into the retracements of the trend line, which is sweeping major highs on the daily chart and getting quick, fast reactions off of these types of highs on the daily chart. And so we're wicking into them back into the trend line, wicking into them with big, strong 5, 6, 7% retracements back into this trend line, really fast retracements. And I think this, I said this aged kind of well. I updated that I'm cautious here for a breakdown sweep of these lows, but I can't really invalidate my trades into this grindy uptrend thesis into this uptrend. It wouldn't be so different to cutting longs on Doge here, which is the updates I just went through on Doge. This is where I should be adding to my longs. Definitely not cutting, right, into the uptrend, because this is where I get the most bang for my buck into the thesis. I just need to cut the trade if it's not working. And I can cut it locally and just look for a new setup. Now, one of the reasons I decided to do this 30-day challenge in the public Discord is because I took a ton of longs into some of these strongest coins before these big moves. I was carrying a lot of unrealized risk, unrealized profits, and some of that stress started to really accumulate, which is even me as an experienced trader continuing to add to longs, hold longs. And when all of this sort of resolved into where I secured, with no matter what happens, major profits off of not just Doge, XRP, ADA, I really felt this like, oh, I need to take a break. That was sort of my initial reaction. Like, I need to slow things down, sort of some R&R. I've put in the work. I want to kind of relax a little bit. I'll look for some of these deeper pullbacks and not kind of wear myself thin. I thought about that for a little bit. I said, you know what? I'm going to actually challenge myself here and do the opposite. I'm going to take on more. I'm going to initiate a call to action here and use this momentum of all these big winners to challenge myself and put in more work. So just pointing out here that this setup was also the pico bottom of ADA right under this, which was here. And we're going to look at ADA too, which I kind of missed so many opportunities in hindsight here. For all the opportunities that I seized, but what I'm trying to establish here is I took losing trades into this thesis and I took winning trades. It does not matter. It cannot matter. You have to be willing to take losing trades to put on risk. There's no way to avoid it. If you avoid it, then you're not going to capitalize on the ideas, right? You're not going to capitalize on the structure of price. You're not going to capitalize if you're saying, well, I can avoid taking loss. What if I just put a teeny tiny position on here and I put my stop loss at 0? And so I'll make 0.3% if it rallies 100%, and I'll lose 0.1% if it goes to 0. It's like, no, you can't trade that way, right? You want to put on a reasonable amount of risk as a trader and be willing just to take the losses. This was this long on XRP, or sorry, on ADA. And the reason that I'm, you know, I tweeted, I think on October 19th, this idea of an OG narrative where we have Doge rallying, XRP rallying, ADA rallying, all these OG coins. And I mean, obviously, that's kind of played out. But again, wasn't really looking for shorts into here, just looking to add to longs. And why was I looking? Let's go here. So similar to XRP and Doge, everything was a long to me on ADA. Just looking to get more exposure. Let's work through this backwards. This is the long I just took a loss on ADA, which was, again, just looking to trade the exact same setups into the uptrend. I see no reason not to be willing to put on the risk here in the same way I was willing to put on the risk into the exact same setup. I don't know what's going to happen. I don't know if the strong uptrend is going to continue. I don't know if it's going to break down. And as price came back into the lows, I did an update saying I'm watching ADA for a potential long setup here into this uptrend. I explained why I wasn't taking a trade on Doge here. I'm only going to put on so much risk into these uptrending ideas, and if this clean uptrend isn't holding here, I'm cutting longs, and I'll just look for a potential range. And I'm trying the XRP, ADA long. We got a little reaction, and I got stopped out. But several days before that, everything in here was a long. Looking at this, we ended up with this trending structure. Go back to the updates really quickly. So the reason I feel like I kind of misplayed ADA here is there was actually so many clean long setups here. Like what we're looking at here on the chart is this. I'm going to put it on the I'm just going to flip over to trading view really quick. I should have been putting on more risk on ADA. I'm just kind of crudely drawing this. Just looking for a reclaim line is here, 72 cents. Obviously we rallied like 60%, almost vertically here. So this setup was this. Willing to, again, long into these trending structures. Add to longs, hold longs, add to longs. We ended up forming this bullish market structure locally. And what I noted here as price broke out is this whole setup here, this all could have been refined so easily, because what we ended up getting on XRP, and this is the benefit of hindsight in some cases, is literally the setup that I'm trading every single day into these trending structures over and over again, which is trending structure into the GP ping, trending structure into the GP ping, breakout of this descending structure, retest, ping, ping. This, so where I would say this was just a massive trading error is not seizing these opportunities. Imagine if this is your system for trading an uptrend. These trending structures into GP retracements, same setup on Doge. Literally, if we can go into the 15-minute chart here. I know this because I also did scalp and trade into some of these ads. Just an absolutely insane trend. This is the setup of every single trending structure, GP, impulse, local trending structure into the GP, local GP of the trend, impulse, 1, 2, 3, trending structure into the GP, impulse. This is the setup, right? This is the system. This is the system that I'm using to trade into an uptrend. The definition of the word system: a set of principles or procedures according to which something is done, an organized framework or method. This is a simple framework. There's nothing complicated about identifying trending structures, being willing to put on the risk into trending structures, fib retracements, those overlapping confluences and intersections. So, can I say that I should have traded this a little bit differently on ADA in terms of where it doesn't matter that I have longs from lower. I'm in this chart trading it. I'm watching these setups, the same concepts, right? But why not put on more risk into this setup? Why not put on more risk into this setup, into this trending structure? And I took this trade for the same, reviewing all of this and saying, I should have been in this trade. I should be in this trade. I definitely need to put on the risk. I just didn't reassess the framework quickly enough. This is the 30-minute chart here. But that quote I shared earlier, which is, your edge is only valuable if you have the discipline to execute it flawlessly every time. I want to go. Oh, I was on the wrong. No, I'm on the right page here. I want to go to this. I'm just going to find this really quickly because a member posted this and I think it's good. Again, love to see all of this. think the update's a little higher, or the comment. All right. The biggest breakthrough in perspective for me derived from these two statements in the seminar. The benefit of thinking in probabilities becomes evident when you understand the relationship between how price moves and the mathematical formulas and price patterns that make up a trading methodology. This understanding helps you to quantify that price movement into tradable edges. An edge is nothing more than an indication of a high probability of one thing happening over another. I do think this is a simplified definition of an edge. It's not actually that simple, but notwithstanding. He says, I've already collected lots of data to prove my edge, and now I understand that I just have to focus on executing it flawlessly and mapping the emotions that come up during this process. It doesn't make much sense to continually be trying to optimize it when I haven't even closed the profit gap on myself completely. Also, I really love the definition he gave for self-discipline, which will help me to identify my shortcomings and how to change them. Self-discipline is making a conscious commitment to pay attention to what you are thinking, saying, or doing in relationship to what you are trying to accomplish at any given moment. If and when you realize that you are not appropriately focused on your objective, meaning you notice you are either thinking, saying, or doing something that is inconsistent with what you are trying to accomplish, you deliberately refocus your attention on your objective or goal. And then he ends this by saying, obviously, there's always room to improve your edge, but anything can be an edge. So if you found one and are not making consistent profits, the answer is in your mind, not in the market. And the reason I want to read this quote is because if your system was to trade this setup into this trending structure on ADA, on XRP, on Doge, and you traded all of this and you did not make money, even though the entire uptrend was defined by the setup you were trading, is the problem with the setup or is the problem with you? If somebody told me it never works, I've been trading these trending retracements into the GP, putting on my long, putting my stop, and I'm just taking losses after loss after loss. It's like, okay, let's go back and look at what happened. Why weren't you in this trade? 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 Why weren't you in any of these trades that worked? Why weren't you in this trade? Why weren't you in this trade? Why weren't you in these trades? Why weren't you on these trades on XRP? I mean, the entire uptrend is just that setup on every time frame. Well, this looked really scary, and I didn't like the reaction. And when we came, so I just put my stop at break even, and I got stopped out. I did long this one, but I got stopped out when price came back to retest this level, and then it carried on. It's like, okay, that's an execution error. It has nothing to do with whether or not this setup has an edge. Why didn't you take this one? Well, this one was actually a break in market structure because we made the lower low and the lower high, and so I thought the uptrend was breaking, and so you're adding all of these things, right? You're adding all of these things. But I took this one and it lost, and I'm just done. I'm done trading. I'm done trading these setups, right? What is the point of an edge if you can't execute it and you don't understand it? And if you don't understand it, you can't execute it. For example, here on ADA, I took this loss. What is the idea of the trade? The market is random. If I had held this trade, I could have just been in profits now. If I'd put my stop loss a little bit lower, if I'd done this, I do not know what's going to happen here. I'm willing to put on this trade into this trend line And if it breaks down, I'm going to cut it, and I'm just going to look for a new setup. Is this a trading error? I don't think so. This is a single event. And what I've seen too often is traders changing everything about how they trade. I've essentially changed, I mean, maybe this is a bold claim. I don't know. If you've been a Discord member for the last 3 years, I've essentially changed nothing about how I trade. Fundamentally, technically, there's essentially nothing that's changed. It doesn't matter if I go on a 5-trade loss streak. It's those are certainties. I know that's going to happen. If the next 5 years, I'm gonna lose 5 trades trading a setup I've traded 1,000 times in a row, and I'm gonna keep trading it. It doesn't matter. But too often, somebody will get into a situation like this. Whether they traded these or not, it doesn't really matter. This will happen, and they'll say, the uptrend broke, but then price just rallied and came back through my entry, and I could have just avoided taking that loss. And when they get into the next, this is the undisciplined, not understanding that what happened here is completely irrelevant to how you should be trading this setup. They'll say, next time I'm just going to pull my stop. I'm just going to wait till I get out at entry, and this is going to happen. And they're going to lose it all in one trade when they could have just gone on and traded a new setup. And what are they trying to do? They're taking a loss. And doing so, they're going to take a devastating loss. But what I want to point out here is, if you go through my updates in the members Discord, you're going to find so many trades that I got front run on, that didn't work. I traded into an uptrend here on Litecoin. I'm going to go to this. I want to just show some of these losses. I traded into this uptrend for continuation. This is where Bitcoin was pushing up and a bunch of alts broke down. I did notice some members trading into this uptrend, Pico bottoming this low last night. Very nice. I was looking for these lows to get taken into this uptrend. Got front run on that. But the reason I'm looking to trade into these uptrends is not because I think price is going to bounce on any individual trade. It's because I believe that there is an edge in a trending environment to be putting on risk into these setups, taking profits, continuing to do so until the trend changes. It's a trending environment. I'm expecting XRP to trade towards all-time highs, to trade towards $5. We could have some deeper corrections, but I'm not assuming we're going to get them. I have a little alert set here. We're up at the local GP. We've pinged off it twice already. probably tradable in its own right here. But am I going to be interested in this setup on XRP? Coming and taking both of these lows into this established uptrend? Yeah. We have a lot of nice confluences. A liquidity grab of these two lows into the uptrend, into the GP. It's a setup I'm trading all the time. And I do not care if it works or not. Am I going to put my invalidation down here to give me a better chance of staying in the trade? Nope. I'm going to trade this pretty tight. I'm going to use these trending structures as my invalidation. I'm going to use these horizontal structures as my sign of strength and trigger, looking for a liquidity grab down into this low. I'm going to put it on the trade. I took this trade last night in the members Discord. Like I said, I'm not I'm not updating every single chart in the public Discord that I'm trading in the members Discord. But even though I just lost a long on ADA and a long on Doge within the 24 hours before this trade, trading, this is a bit of a different setup. This is more like the Moodang setup. I'll say this too, that again, it's important to establish not every one of my trades is just trading into a trending structure. There's sometimes where I'm looking at something as more of a range, as a horizontal structure, looking to trade the horizontal lows. We'll jump to present here. So I took this long on Pepe, and the reason was, several weeks ago, I was just looking for this long. This is a setup I'm trading all the time, looking for this range to form. I actually shared it earlier. Willing to put on this trade, just waiting for it. When the trigger came, which was a move into the GP, sweep of the lows, I'm just putting on the risk. I just taken this loss on Doge. I took a loss on ADA. And what am I doing? I'm just going to trade the exact same trade, or sorry, a very similar trade, trade my next plan and put on the risk. I have no idea if this is going to hold or not on Pepe. So far, so good. Nice little downtrend to pop out of here. Getting a nice little bounce off the GP and POC on Bitcoin. But what watching this live stream should do is demonstrate that I am not doing anything differently at any given moment. I'm taking the same setups over and over and over again. I'm winning some, losing some. And because of that, I get rewarded with positions like this. And sometimes I get punished with a stop loss. And when I get stopped out, I don't care. I move on to the next trade. I've had a few people. I took this loss on Doge. I took this loss on ADA. There probably could have been a different setup in here. I took this long on Pepe. I should say this. Similar to how I was, I have a broader thesis for my trades. This is, this is the thing that can't be overlooked, is that the reason I'm trading, let me go here. The reason I'm trading aggressively into these uptrends on shallow pullbacks, this is not how I'm always going to trade. This style of trading is going to punish you in certain environments a lot, right? There's certain environments where this trading everything, taking every trade towards a strong trend with the thesis of price moving 50, 60, 100%, 150%, that is not the environment that the market is in most of the time. But recognizing that it's in this environment now is important, and trying to capitalize off of it. But I want to find this update specifically. Too many updates. I'm not sure where I'm giving the, well, anyways, the entire reason that I'm looking to trade ADA aggressively in these environments is understanding a lot of this adjacent structure here on this breakout, right? So I'm understanding that this is an area of the chart. I did talk about it in the Discord, talking about why I'm looking to long aggressively, because at the time, the reason I'm talking about this now is I don't want everyone to assume that this is the only way. This is a way to trade a strong trending environment efficiently and capitalize on some of these ideas. But the only reason that I'm longing into these structures and wanting to in this environment is because if this uptrend holds and this grindy structure plays out, you're really looking for price to move through this area of the chart very quickly. So you get these 50, 60, 70% pumps off tight invalidation trades. But we can obviously understand that there are situations where trading into all of this aggressively as an uptrend is going to be really punishing, and not looking at this as more of a choppy range. Same goes with Doge. I in fact got punished trading into this as a strong uptrend with a big round trip on XRP, and I got rewarded for it here. Trending structure is getting a little messy. This is so simple in a way. Mexc, you can just kind of look at this and say, well, okay, I took a stop on ADA here, adding to this position. If I want to just be disciplined and patient, I don't really care if I end up taking a long into something like this. Let's get rid of this trend line because it's already broken. I just kind of got distracted by looking at this for a second. There's no guarantee that this level comes, but I would just I would approach this way. If I get a move down into the major ascending structure and the GP from this consolidation to this high, sweeping these horizontal lows, retesting this impulse low, and reclaiming it, I would trade that towards continuation. I'd put on this trade. There's literally no reason to overthink trading that setup. And there's probably no reason if this starts breaking out not to consider trading any new established trend. So those are things I'd be looking at for ADA. Basically looking to trade this setup or this setup. Trend line breakout retest. Your retest of this horizontal low. Someone asking, how do you mark out trend lines? Well, a trend line is drawn between 2 points, with the third point establishing it's a trend, right? I mean, that's the simplest way to define a trend line. Like, the third touch is not a, it's guessing, right? It's guessing that there's going to be a trend line. This is a low, this is a low, and this is a touch. This is a trending touch. Technically, because of this wick, this is actually a fourth touch. This is a fifth touch, sixth touch, an internal trend line here. And so, to some extent, the whole idea here is trading into this trending structure. One, I like to look for fib confluences into the trend line. Like, for example, these ideas into Doge. This is not a trend line. It's an idea of a trend line, right? And I came up with the idea when price was here, looking for a move. There's some significant highs here, come back down into the trend line, and longing into the idea of a strong bullish trend continuing. This ended up being, this is a member shared this idea actually, and this was actually another internal. I thought this was an internal trend line, maybe it wasn't. So if we're looking at ADA, let's just delete everything here. Let's keep it on the 30-minute chart. Go to the origin of the trend. Go to this last touch. That's what I was trading that broke down. Go to internal structures. This wouldn't be so relevant, I wouldn't think, on this time frame, but relevant for this third touch. There's no internal trending structures here after this impulse. because it's just a downtrend, right? That's why kind of looking at this as a relevant idea to come down into this trend line. Into this GP. And this would be a third touch of this trending structure. This would be the definitive trending structure of this uptrend because it takes into account the origin of the uptrend. There's no overlaps here. We pull to this low. Nothing has fallen outside of this trend. And so anything inside of this keeps the overall trend intact. You have a nice local low to take into the GP. Not a bad looking setup for continuation. I have to take a piss really quick, and I'll be right back. All right, I'm back. So what is the appropriate reaction for me? If ADA does this, maybe it runs through this trend line, doesn't really matter. Comes down to this low, does this, and I take this trade in literally the same way that I just took this trade and got stopped out. It's essentially the exact same idea, which is we have an established low, we have our trending structure. Stronger variations of a trend. I just got stopped out. Price comes down into this low, and I have essentially the same setup. Price comes and takes this established low into our GP, into our uptrend. We react, reclaim this low. I fire off the long trade. And this happens. Is there any reason for me to be upset? Is there any reason for me to stop trading this setup? Is there any reason to assume that I've done something wrong? Now, the answer to this isn't actually very clear. I may have, in fact, done something that there might be something here that only happens when this trade setup would lose and I'm not identifying it, right? And maybe it's that if I go back and back test and I find out that every time this setup appears on a Wednesday, it doesn't work. It's never worked on a Wednesday. Maybe I go back and check 5 Wednesdays and I say, oh my God, it was a Wednesday. It'd never take that setup on a Wednesday. I can't find a single example of it working on a Wednesday. Well, how big does that sample size have to be to justify me not taking this trade? It definitely can't be 1. It can't be 5. And so what ends up happening, this goes to the member who's left the comment saying, why am I trying to refine my edge when I can't even execute the edge that I've identified? Which is, if you've been trading this setup into this uptrend, again, whether it's on Doge, whether it's on ADA, and it is just printing trade after trade after trade after trade, and then running into a couple losses, why is your energy focused on how to not take the one that lost and not on taking all of the ones that you missed? If you look back and you say, okay, if I'd taken this setup the last 20 times, I would have done 500% on my trading account. But instead of focusing on why did I screw up trading the idea that I'm trying to trade so badly that I made no money trading it, when almost every trade would have worked except for these 2, and now all my energy is being focused on how to not take that losing trade. Was the problem clearly isn't that your system in this case is producing too many losses, right? There's more than enough wins to compensate for the loss. There's another problem here. And so I've had this conversation with people, because what will happen is, I've had this conversation with members, and it's not there's no ill intent, but it will be a conversation like, I noticed that you said you took this trade and it lost, and you said you don't care, you're just going to move on to the next trade. Don't you think you should be doing some more work to try to avoid taking those losses? Wouldn't it be better for your system if you could avoid taking some of these losses? Why wouldn't you want to improve your system? Well, how hard is it to make a material improvement? I mean, what can I do that would materially improve this system? Because if I add one component, like don't take the trade on a Wednesday, and that is not very thoroughly supported, and some kind of half thought out fear-based reaction to taking a loss keeps me out of a trade like this, because I'm so desperately trying not to take this loss. And if that component that you're adding into your decision process in your attempt to refine it stops you from taking 1 or 2 of these trades where you have a massive edge, it's deteriorating your edge. Even if, I think this exact person said, if you did this, it could reduce, yes, it would cost you some winners, but it could cut the number, where you would have taken 10 losses trading this 30 times, you'd only take like 7 losses. It would reduce your losses by 30%. And yes, it would cost you some wins too. You'd probably take like 5 fewer wins. It's like, well, then I don't want to do it. Even if it could reduce the number of losses I take, if it's reducing the number of winning trades that I'm taking that are 20R, 30R, 40R, I don't want to add that into my system. I'd rather just take the losses and be in more of the winners. Why would I be trying to eliminate losing from my trades? This is an important concept, because I know for certainty that there's actually no way to eliminate losing completely. You can drastically decrease the odds of losing a trade, which is put your stop losses at 0 and keep your risk management intact. In fact, I would say it's a little bit of a LARPy kind of approach to the markets, but there's a pretty well-known trader who he claims a 99.99% win rate, and he's not lying, but all of his trades have 0 invalidation. He would just say, I'm going to long Doge here, my invalidation is 0. I'm putting 1% of my trading account, and Doge could go down 80%, and he would say, I haven't taken a loss. Could go down 90% and sit there for 2 years. He'd say, no loss. I'm just going to add to my long. And he only took 1 loss when Luna did go to 0. When he longed the top and Luna went to 0, and he says, okay, I've taken my first loss. I've cut my Luna position but he's just padding a win rate, right? In this circumstance. I don't care to pad my win rate. I want to trade efficiently and optimally given the environment of the market. So I know, generally speaking, there is no way to avoid taking losses. It's not even something I should be trying to do. I should be looking to trade with an edge. Understand my edge and execute it. And my edge can include losses. There's no performant trader for the last 50 years. You could look at, I suggested people read the book Market Wizards. People who have outperformed the market for 30 years plus, made billions of dollars, never even had a losing month. Did they do this compounding tens of thousands of % of returns? Did they do this by never taking a loss? No, all of them talk about the importance of accepting and taking losses. Losing is built into their system. They're not concerned about trying to avoid ever taking a loss because it has nothing to do with your profitability. And so at some point, if your focus becomes on avoiding taking losses instead of accepting that losses are part of your trading system, you're trying to avoid something that is unavoidable. And why would I try to avoid something that is unavoidable? Why would I take something, a type of setup and trade that I've traded hundreds or thousands of times and is producing positive results for me, and then try to make major overhauls to it based on the incidence of a loss? It doesn't make any sense. And my point is not that if you use a stop loss and you put your targets really high and you trade trend lines, you're going to be a profitable trader. My point is, in this environment, has this been an edge? You literally can't say it hasn't been an edge. These trades printing, I could trade these setups now because of these winning trades, printing hundreds of R at this point over the last month across Doge and XRP, and I could trade this same system for the next 2 years and take hundreds of losses and never win and still have a profitable result trading this edge. So it's going to be really hard at this point to convince me that I should change what I'm doing. And I know for a certainty the frequency of something like a 3-trade, 5-trade loss streak is, or something like a 3 or 5-trade loss streak is a certainty. So certainly a 1-trade loss or a 2-trade loss is not going to have me considering an overhaul. Are we, someone's saying they're not hearing sound. That's probably when I was going to the bathroom. Okay, I want to read through some comments. I haven't really been looking at the comments at all. Someone's saying if we should be trading like robots, using predefined strategies, why don't we just use bots? Why be in front of the charts at all? Well, obviously, lots of traders do. with some human oversight. Definitely, if you want to define your strategy into a trading bot and have that execute it and you get good results, no reason not to. Someone says, would it be fair to say that good trading strategy is optimized to lose well rather than win well? Well, it should be optimized to do both. I mean, the simplest way to put it is, it's not about how often you win or lose, although that is a component of your trading system. It's about how big your winners are and how small your losses are. I mean, pretty much every trader lives by the mantra, keep your losses small. And definitely keep your losses small relative to your winners. You know, maybe I'll pull something up here, which is that equity curve simulator. The reason that you just mathematically want to keep your losses small is because if you're taking enough trades, you're going to run into loss streaks. It's just inevitable. And those loss streaks can get pretty big. So I've heard people say, like, when I use the definition or the example of a coin flip to represent what the market is, people say the market's not a coin flip though. Like a coin flip is more random. Things happen in the market for a reason, right? Like it's not just like a coin spinning through the air and landing on up or down. But the analogy is to say that the things that drive the actions in the market are unknowable, right? So it's random. So you're going to have a random result. It doesn't matter whether you think of it as there's a reason or there's not a reason. No matter what you do, you're going to have a random distributions of wins and losses. Your win rate could be 30%. You could be trading on average 10 R. Some of your trades could be 50 R. Some of your trades could be 5 R. Some of your trades are losing 1 R. Your win rate could be 80%, right? But no matter what you do, and the reason that this is just, I'd say, universally true, no matter what you do, you're going to why don't you have a 100% win rate? Why don't you only take the trades that win? Why don't you only long the bottom and sell the top of every move on every time frame? Why don't you do that? Because you can't know that, right? You can't know it. No trader's ever figured that out. They have longed the bottom several times in a row and then sold the top several times in a row. But then they long a bottom and the bottom doesn't hold and they either cut the trade or they don't. And so over a series of trades, you're going to have statistics that represent random outcomes. And you could say, you know what? I look back at my trading history and I see I've won 62% of my trades with an average win-loss ratio of 3-1. And I took all these trades for all these reasons. You know, so I took this trade because of this and it worked, but I took the next trade for the same reason and it didn't work. And you know, maybe I've gone in there and tweaked and said, maybe it didn't work because of this. And so I add that to my system. And maybe now I'm at a 63% win rate, but now I've added more samples and I'm still taking this trade. And in the end, you're just left with 100 trades and a 63% win rate. And you can't figure out why the trades that worked and the ones that didn't work. And no matter how many variables you add, you could start saying everything was identical. I took this trade at the same time of the day, the same retracement, the same structure, the same volume, the same this, the same that. One worked and one didn't. And you could start adding, well, this time there was a bird chirping and the last time there wasn't a bird chirping. So I add the bird chirping. Okay, that's not it. You're never going to remove the random outcome. It doesn't mean there's not a higher probability of one thing happening or another, but it's always going to be a random distribution. And because of that, if you aren't losing well, like you said, it doesn't matter what you're doing. Now, losing well is in the context of your trading style and your trading system. You have to understand, not every system needs to be traded one with as low risk as 1%. It's a pretty common standard. And some systems have to be traded with much lower risk. 0.1%. And I've shared some examples of that in the past. But if you aren't losing well, which is to say that your system doesn't have an edge if it blows up your account. It doesn't matter if the whole system here on Doge, this Doge uptrend, let's just say every trade works. You long this and all the micro time frames, you get it all, and your system is you put everything into every trade, and there's no invalidation, and you 2x lever it. You're going to be printing money. You're going to 20, 30 extra account in the course of a week. Maybe a couple times, in this case no, but a couple times you sit through an uncomfortable drawdown and it prints. Do you have a winning trading system? You have an edge in this case, but if one loss wipes out your trading account, it's not an edge because of your execution, right? So what you're sacrificing with a little bit of risk management is the immediate gratification of a win streak. 20xing your account to avoid the inevitability of blowing up your account that's coming if you keep doing what you're doing. So let's go here. Okay, we're going to start with the start equity. Let's just say trader 80%, win-loss ratio doesn't really matter, number of trades 20, start simulation. It's not hard to understand why an equity curve of these traders looks like this, right? They have a win probability of 80%. They're printing 3x their risk on every single trade. Start with 5,000 equity curves just straight up. Some of these traders took a max consecutive loss streak of 6 and a max consecutive win streak of 25. Now, what would the equity curve here look like if instead of risking 1%, and by the way, so minimum equity here, or minimum equity, max equity, trading this system over 100 trades, 80% win rate, 3-to-1 risk reward ratio. We have somebody that ran an account up to $60,000 over 100 trades, risking no more than 1% per trade. We have a max consecutive loser of 6, a max consecutive winner of 25. Now, it would feel pretty good to run on a 25 trade win streak. You know, even at 3R, that is massive. But as soon as you run into this 6 trade loss streak, which is almost something like a 3 or 4 trade loss streak is probably inevitable, even with an 80% win rate over 100 trades. But you run into that 6 trade loss streak, and you were trading this exact same system with 20% of your capital, you've blown up your account. So you need a system that's profitable. You need to win. You need to win well. But if you're not losing well, which is defining your risk, even some of the most profitable systems that should just produce a straight up equity curve are just going to blow you up. So yeah, I would say that it's not the only thing that defines a good trading strategy. A good trading strategy needs to have an edge, but without losing well, you can essentially destroy any trading strategy. And for anyone, I guess I'll touch on this because for anyone wondering, you know, what the slog, you can kind of see it here, would be of using risk management. Let's say you're trading 3R setup. So 3R, you get 3-to-1 on your risk. I'm not going to explain what that is. I just did a little bit in the Discord. over 100 trades, you're expecting some kind of equity curve that looks like this. It's incredible, right? You're going to run into some big loss streaks, up to 11 trade loss streaks. Max consecutive, I mean, it could be more, it could be less, but if you simulate it over the course of, some traders are going to have more, some traders are going to have less, some traders are going to have bigger win streaks over this sample size. The more trades we add, the more this distribution will kind of fall around the mean. But you're going to run into, in a trading system that is printing straight up 11 trade loss streaks. Max equity 18,000 from 5,000 over the course of 100 trades. I think what I want to point out here, I'm going to go to the compound interest calculator. If you start with $5,000 in a trading account, this is what's absolutely imperative to understand. And you earned 5% a week in your trading. So, some days you might lose 1%, make 2%, lose 1%, make 3%. But on average, you make 5% per week. And you compound your trading account. And you produce a system that generates you consistently a 5% return per week. Now, if you're an experienced trader, you'll know where this is headed. And you can see it here on the screen. In 5 years, you'll have run your $5,000 account up to $1.6 billion. Earning 5% per week. You'll have doubled your trading account after 4 months. Year 1, 58,000. Year 2, 735,000. Year 3, 9 million. Year 4, 117 million. Year 5, $1.5 billion. Now, if the market is a random is just a chaotic random place, a probabilistic environment, and you have to do some work to produce an edge in it, do you think it's a reasonable expectation as a new trader to have your plan be to turn your $5,000 trading account into $1.6 billion over the next 5 years? If you earn 1% per day, do you think it's a reasonable expectation to turn your $5,000 account into $385 billion over the next 5 years? Now, I want to just challenge you with something. What is your expectation with your trading account? What is your expectation? What are you expecting to happen? Are you expecting to consistently earn more than 5% a week? 5% minimum. And be able to consistently generate that result. Well, then your expectation from the market is that it's going to earn you $1.6 billion over the next 5 years. If that's what you're expecting, right? Most new traders are expecting, especially in crypto, to double or triple their account every week, every month. They want to do this every week. They want to double their account. And this is my point. That you might say, well, my goal's not to double my account. My goal's not to double my account every week for the next year. My goal's just to double my account this week. How are you going to do that? Well, I have this idea because, if I do this and I run a really tight stop and I 100x and it goes up 10%, I'll have doubled my account. Well, do you think there's any chance in hell that that's a consistent edge? If it was a consistent edge, then just turn your trading account in the next year into $22 quadrillion. You might have to cut yourself off once you have all the money in the world because there's no one to trade against, right? You've taken everybody's money. What about 5% a month? You put in all this work, you grind out 5R a month, and you compound it monthly. 5 years, you're at $100,000. 10 years, you're at $1.5 million. I meant to put 15 years here. $15 years, you're at $32 million. Has anyone ever done this? Yes. Play around with this and ask yourself if your expectations from the market are reasonable. $8 a month. $8 a month over 10 years. Yearly compounded 151%. Has anyone ever done this? Yes. This is reasonable in the sense that it is achievable. And just type in compound interest calculator and you'll see it as one of the first results. There are traders who have turned $9,000 accounts into $100 million with 35% win rates, risking something like 1% per trade, earning 8% a month on their trading account over the course of 10 years. There are traders who have compounded 30% annualized for 30 years plus. Actually 60%. Give Jim Simons his flowers here. 30% or 60% a year. $9,000, a 30-year career, compounded yearly, $12 billion. 40% a year over 30 years. $217 million from a $9,000 account. These are the statistics of some of the greatest traders to ever live, producing consistent results. Your goal as a trader is to produce a consistent edge with minimal drawdowns that averages out. If it averages out to something like 8% a year or 8% a month, you are going to produce world-class trading statistics or trading outcome over 10 years. The problem is, can you make more? Yeah, right? Is it possible? Is it possible that you are going to have a month where you do 150%, 200%? Well, yeah. With risk management, yeah. You find yourself into some compounded trades into a trending environment. You're also going to take some losses. Going to make some wins. But what you need to understand is what you're aiming for, right? And the point is, if you're aiming towards something that is like, let's just say this. Let's just say you're sitting here as a new trader and you're discouraged because you say, you know, I put in all this work. I've really refined my system. I'm keeping all my execution really tight. I made 8%. I made 8% last month and 9% the month before. Like, this just isn't working. This isn't for me because my expectation is I'm trying to retire off of trading this year. I'm trying to go full time this year. And all I can do is produce, after all this work, I'm producing 8%. Well, you have to understand what you're producing, right? I mean, if you have a $9,000 trading account, you're on your way to being worth hundreds of millions of dollars with a consistent edge. But then you might go onto Twitter and you might say, I just saw a guy who put all his whole $9,000 trading account into this and he made $120 million off this. And maybe you look at this and you say, and it's going to take me 10 years to get there. Well, do you think there's any way that you're not just seeing a random outcome that has no verifiable, reproducible edge that you could reproduce? That you're not just seeing one guy in a sea of a million guys that won the lottery? Is there a reason that any of the greatest money managers and traders that anyone talks about who've made billions of dollars over their careers didn't just make it all from one trade? Is there a reason why the types of people that you hear about that turned $10,000 into $400 million in 9 months trading, I think it was $80,000, trading Tesla options as a carpenter, didn't go from $100,000 to $400 million back to $0 in the span of 2.5, 3 years? So one of the important things, you know, I spent a lot of time talking about why do anything at all when you're structuring your trades. What are the things that you're taking into account? If you don't know what's going to happen, and if you don't know if price is going to go any higher or go any lower or bounce here or go to here, why enter? Why put your invalidation here and not there? Why cut the trade at all? And you're trying to take into account probabilistic ideas and define them and bring some order into the chaos, right? The components of a trade in terms of invalidation, entry invalidation and targets and sizing as a component of that is your way to control the parameters that are important in an unpredictable market. So let me go here really quickly. Because it's really secondary. It's really secondary to what exactly you're trading to understand why you're doing anything at all, right? Like you're not taking a long on Bitcoin here because you're expecting to win a trade. And so I gave this example that kind of looks ridiculous, although in this scenario, I actually think it's probably profitable. I wouldn't be surprised if this generates an edge just locally here, which is trading somebody who's saying, I'm going to long every shallow pullback here with my sizing just to get stopped out at every consecutive level and long immediately again with the same sizing. Now, this looks erratic in a way because it's saying, well, why would you stop out your trade here and not just down here and take into account both of these levels? Well, then I would just say, well, then why not just stop out your trade down here to take into account these levels too? What if price goes down to here? It's like, okay, well, good point. Yeah, stop out your trade down here. Okay, well, why not just stop it down here? What if price goes under all these lows? Okay, yeah, that's a good point. You know, there are a lot of levels here. Let's just let's stop the trade out down here. Well, all of a sudden you're risking 15% of your account and you're saying, well, I don't want to risk more than 1%, so I'm going to have to size this pretty small. I'm going to have to say, if I want to take into account all of these levels, and now you have a trader who says, I'm going to long every level. I'm going to long every level and take a full stop, 1%, 1%, 1%, 1%, with the idea that maybe we're going to bounce somewhere here. So he's taking the opposite approach. Instead of saying, again, it's an extreme example, but it's saying, instead of saying, answering the question with, well, why put my stop somewhere? And having that being, well, I think this would invalidate all of the bullish thesis in this local price action. He's saying, I'm going to put my stop tight, but long everything just to justify sizing bigger into these big bullish divergences. If we come down to this low, I'm going to long this as a separate setup, long this as a separate setup, long this as a separate setup. Because you could have a reason to do anything, but what are the things that you're trying to account for? Well, first off, this is just me personally, right? This is my own interpretation, and I could be very wrong about the context of price here. My first assessment here would be, I'm expecting higher as more probable than lower. These local pullbacks aren't changing anything. I have some uptrending structure. I have our POC, GP. I'll go to the members update from yesterday. Looking at this, the POC, the GP, the 786, these are both the local relevant levels to me. This is the daily chart. We take a daily candle low. If we break down lower, we take this. I am deferring to it being more likely a higher low forms here. We're just going to work through the problem of why do anything at all. Yeah. And to me, these really large bullish divergences that continue forming into this uptrend, they were intact here. This pullback does not mean I'm suddenly bearish. I want to be long with size appropriate to the structure of price here, and to reflect that these bullish divergences are local. So, like, for example, we have these big bullish divergences forming at the lows before this impulse, followed by a really big one before this impulse. Big absorption of selling pressure, and then here we see it again. And so if I'm sitting here looking at this and then looking at these big bullish divergences forming, it's not that price coming down any lower invalidates. We'll just have bigger bullish divergences and price will have come down a little lower. We have this nice little trending structure that we are moving off of here. It's not that it invalidates my reason for wanting to be long, but I want to capitalize on the fact that these bullish divergences make it more likely, not certain, that we're going to bounce without a deep pullback. It's more likely, in my view of the market, I could have this completely wrong, and I've seen big bullish divergences. There is, against a probabilistic environment, not generate a big move locally. We've had bullish divergences, and then price has come significantly lower, and so that's why I use risk management. But the probabilities lean towards a higher low forming off of these bullish divergences, and so I want to capitalize on that, right? I'm trying to capitalize, not invalidate my long setups based on where I'm bearish, because I'm not actually really bearish. For example, if this doesn't hold up, I just want to be long on everything. I want to be long on everything. I think higher is more likely. The local uptrend getting broken through here. We have a big POC, a GP. Again, a setup I've just traded 1,000 times. It's not that I know if price will come down there or not. It's just if we run into this, reclaim this daily low, this is just a long trigger. We have massive bullish divergences. I'm not frustrated. I'm not frustrated that I took a long higher, and I did, and then I took a stop on it, and then I'm just longing again lower. And to me, it's not this is not the solution to this problem for me, to say, well, I should have long this like this. And why isn't this the solution? Because I don't care about taking the loss as much as I care about capitalizing on these big bullish divergences with appropriate size to what is most likely. And what is most likely, in my view, this is my interpretation, where I think I have an edge is I need to capitalize on the idea of a higher low forming here into continuation off these big bullish divergences. And it's the same thing into this uptrend here. It's not that I know price is going to start bouncing off of this uptrend. It's that we have massive bullish divergences, and if I'm going to take this trade, invalidating it locally is the best way to capitalize on the edge of this order flow. If price does this is still in the context of bullish ideas. It's a different idea. I would trade this separately. Why sacrifice the edge of this internal structure, the big bullish divergences, to avoid taking a loss? Big bullish divergences forming here, by the way. Grounding impulse all the way into this uptrend. But the point is, if you're looking to trade into those big bullish divergences, yes, sometimes it's not going to work, but does it make sense to consider trading some of these setups separately off of the big bullish divergences, and instead of trading it like this, and even though price coming down here does not invalidate your ideas for being long, and even though you might just get stopped out and then price runs, you have to put your invalidation somewhere in terms of sizing, in terms of structure, for some reason. And the reason doesn't have to be because you're going to be bearish if price goes lower. The reason is there's some probability that is getting higher and higher. And this, again, this is my view, that price is more likely to generate a higher low here to run into all-time highs. And because I think that's a higher probability than not, I want to capture that with the sizing of this trade, not trying to avoid taking a loss by turning what really, in my view, should be at least a 4R, 5R move into something like a 1R move. And if we go lower, I'll just take a different setup. Well, yeah, so of course, someone's saying there are a lot of different strategies that provide many different opportunities. They are all part of your overall strategy. Each gives you different loss streaks, question marks. Yeah, obviously, if I'm trading a range, if I'm trading a range, let's just identify a range. Just create a range here. If I'm trading a range, and my idea is I'm going to long the sweep of this high into the sweep of this low, and then long this, and I'm looking at this as a range. I'm trading this as a range. And when we reject from this high again, the new high, I'm taking profits here. This system, a range trading system, is going to generate completely different statistics than a trending system. There is no way for me to generate a 100R trade trading a local range on the 15-minute chart. I mean, just for fun, I want to see if it would actually be no way. If we go tick to tick, there might actually technically, if somehow I've got this trade going on, yeah, I guess I could generate a 100R trade. But you know what I'm saying. There's no way that the statistics are going to look the same, right? Because this setup defined as a range is going to produce, I could trade that range 1,000 times, and it's never going to produce a trade that looks like this. There are times where you trade as a range. You're trading a range. I'll just show an example really quick, and it turns into trading a trend. This was like an 8-day range before we made our first all-time high. So I'm just going back to the Bitcoin chart here just to give the context. We're back here. Okay, so we had this uptrend, we had this, and then our first push up to 73K, and then 10 months of ranging. So we're zooming in here. I'm not going to go back to the updates here, but I traded this as a range. Many times. So I started trading this as a range locally very early. I traded this as a range into these local lows. I traded a long setup back up into the highs of the range. I can't remember if these were the exact setups, but it was essentially something like this. We were in this range for like 8 or 9 days. So I'm just trading this as a range. I'm never going to produce, I'm not trading as a trending idea, trading as a range. This generally was the idea I was trading. And then again, it was just, I'm just going to keep trading this as a range. We might break down, we might not, I don't know. But then what happened is we formed really big bullish divergences into this area of the chart and into this before the impulse. And so I said, I'm not going to trade this as a range anymore. I'm in this long from the lows of the range. I'm just going to hold this, and I'm expecting higher. I'm expecting continuation because these bullish divergences in order flow are getting so big. I'm not really interested in shorting the highs of the range. I'm not really even interested in closing my long as another range trade. And so in this case, this is an environment where you're trading a range and then you end up trading it into a trending move. I only held this trade up to here. I shorted 57K because this was a major target. We got a brief pullback and then we impulsed out, and then I just started longing everything into here and blah, blah, blah. I've already gone all over. I've gone over all this. But anyways, so to answer your question in a sentence or two, yes, different trading strategies and systems are going to have different statistics, different outcomes, right? It's something, it's something that I don't think it's correct to say that I pride myself in this, but it's something I strive towards, which is trying to trade the market for what it is, right? What is happening, the environment we're in. You can't, there's nothing more punishing than trading a a ranging market as a trend. It's not as punishing to trade a trending market as a range, because what happens with range trades is, for example, if we go back to here, could say whether it's like this kind of idea, or we'll just go back to here. If I'm trading this as a range and I'm doing it appropriately, a lot of times if you're trading it, what ends up being or becoming a trending environment into as a range, you actually can win in that environment, right? You might not be optimizing potential profits, but trading a ranging environment or a trending environment, or what becomes one as a range, is less punishing. And oftentimes you're just going to find smaller wins, and here you're just cutting the trade anyways. If this is a range, yeah, you have the context wrong, but you just take the stop loss and you're out of the trade, and the trend continues, and maybe you're a little sad because you missed this big move on a trending environment. But if you start trading a ranging environment as a trend, and I'm just going to create something kind of ridiculous just so I don't have to move around on the chart too much, which is I'm literally just going to draw some random setups here. This can be really punishing. Even if you ultimately end up being right. And even if this produces, if this produces an edge and you say, you keep taking this setup. For example, breakout trading is not something I do very often. I like to say, if I'm breakout trading, I hope I'm doing it when the price is actually breaking out. We ran into some of those cases, obviously with XRP and Doge, but it's not something I'm typically doing. But if there's a strong trending environment, I'm more open to doing it. But breakout trading obviously is profitable, right? It can be very difficult to trade breakouts, and people get them wrong. They usually invalidate them way too closely. They usually get the context wrong, and I still find breakout trading quite difficult. But we can see here that it's obviously this isn't how you should be trading a breakout here. Anyways, your stop loss should be underneath the lows. Like if you're seeing this as a range and you're trying to trade a breakout towards the range, although people do just run these as tight setups, invalidation just something like this, and maybe you're just punished with just sitting in a trade for 10 days on a breakout idea here. But anyways, this is just a shorthand example. It's much more punishing to trade trending environment or a ranging environment as a trend than it is a vice versa. Because, for example, this is kind of a trending environment, but it's also kind of a ranging environment. Like if you're scalping this as a range, there's shorts, short this as a local range. Even if it locally develops into a trend, you're probably getting out of this shallow trending environment with more wins than losses and with a profitable result. Whereas I defer to look at this as a trending environment and looking for longs and not shorts into this. And I'm still trading this as a potential trending environment, which again might punish me. But you're gonna get away with trading profitably a lot, trading a trending environment as a ranging environment a lot, as long as your targets are reasonable, a lot more often than the reverse. Most of the time the market is not trending, right? Like we just go back to Doge here. We can look at this chart and just say for the next 20 years, if we try to make every one of our trades this, I'm long here and I'm just longing, everything's going to go straight up. I'm holding till all-time highs. You're going to probably not have a very long trading career. Because if you traded Doge that way over this entire period of the chart, and that's the only trade you took, and everything, you're just never winning, right? So picking your spots understanding that this is not typically what's happening is pretty important. It's okay. You're going to find sometimes where you start trading towards a trend and it doesn't hold, but having some context for when you're in a ranging environment or a trending environment is important, and you're going to get it wrong sometimes. And sometimes you're just looking for a trending environment into a ranging environment. I don't think I looked at the dot chart here. I think I was just looking at this earlier, but I can't remember if I brought it up on live stream, but I am looking for this similar setup on dot as well. It's also a retest of some horizontal levels. You know, maybe we form some sort of little breakout here, push up, take these highs into the GP, maybe some kind of parallel structure into the trending structure into the GP, and I'd be willing to look to put on some risk on dot there. Just have an alert set. So this live stream maybe is not what all of you expected. There's going to be people here that have gotten some value out of this, and some people that are more just frustrated, looking for maybe to take some trades, right? I believe what I'm covering now is more important than anything else that you might consider doing as even an experienced trader. Because again, it really is not about the trades you're taking. As a new trader, it's not about the trades you're taking. It really doesn't matter if I post, and I just know this from years and years of doing this with new traders. It doesn't matter if I print 500R of straight winning trade setups and you are exposed to every one of those ideas. If you can't execute these trades and you don't understand them, right? You don't understand why you're doing anything you're doing, you're not going to do it. You're not going to do it well. You're not going to do it consistently. And, you know, it really isn't, it's really not about focusing on the haters. It's just about identifying a mentality. There's this comment, it's now deleted on my Twitter, but I said at the time it's my favorite copy pasta. Let me just find it. It's let me find it here. So when I was saying that I was long on Doge, and this was back from the low, so you know this is back in September, and we were getting a move up on Doge. I tried to find the tweet. They commented, real traders making 2x to 3x from other coins, and this clone longing XRP and Doge for a 5% move, LOL. And I was going to find it because now Doge and XRP are up hundreds of percent from those longs. But the point is, you're always going to get this kind of weird kind of criticism, right? Which is, so when you're dealing with people who don't know anything about trading, and again, it's not from a malicious standpoint a lot of times. Sometimes people are malicious or just ignorant. But they'll say like, dude, you just longed, you're meant to be this great trader, and you just longed the top of Doge, right? Like, regardless of the fact that the same reason I took this long, and by the way, just look how bullish this grinding structure looked. Can you really blame me for wanting to take a long into that? But the same reasons I took all these longs is the same reason I took this long. And then the way they'll look at it is, let's say this happens on Doge. We do this. There's actually some nice ideas around 25 cents as well. But, you know, I longed here, cut the trade. Maybe I'm going to long here. And then price runs down to 25 cents and I take this long. So I 1R, and then maybe I print another 30 or 40R. Who knows? It doesn't really matter. They'll say, you'll get comments like this. You let your ego get the best of you. you know, you thought just because you printed these trades and now you long the top and you're suffering for it. It's like, no, this has nothing to do, or you'll get this criticism that is sort of, it just indicates this lack of understanding of what the expectations of trading are, which is I'm taking winning trades, and maybe because I've won so many trades now I just took 2 losses in a row, and they're saying you're falling apart. You're longing at the top after this move, but you could just have applied that to longing anything in here. I mean, these were 100% moves on Doge as well. No, I'm longing a system that is going to produce losses. And it's really important to understand that I don't know what's going to happen. There's nothing broken with my trading system when I take losses. There's nothing wrong. There's a possibility that I've executed trades poorly, but it's not really my concern to mitigate the incidence of losses at this point in my trading career, because that's not that's not where the bang for my buck is. It's to execute my edge. Okay, I want to just read something. I kind of just want to read through some of these quotes. So here's one that's good, and it kind of goes into back to when I was talking about turning $9,000 into $1.6 billion, which is, I'm going to take the other side of it. But the quote is, there's way too many quotes, I just lost it. Oh yeah, here it is. The market doesn't care about you, your goals, or your dreams. It just is. So I'm going to talk about this quote from a couple different angles. This is another Mark Douglas quote. I'll just repeat it. The market does not care about you, your goals, your dreams. It just is. So whether you were looking at the market, whether you're taking a trade here or you're not, the market doesn't care. It doesn't care what you're doing. It doesn't care if you need to pay your rent. It doesn't care if you're all in on this trade. The caveat to that would be if you're trading with so much size that the market is just going to come to your specific liquidity, but that's not going to be the case for 99.99% of you. And so trading towards your goals, for example, I'll often see people say, this is like a really big trap, which is the simple version of it would be, okay, my portfolio at all-time highs was, worth 100K, and I've round tripped down to 70K. I'm gonna sell my portfolio off once I get back to 100K. What does that have to do with anything? Why would you make your trading strategy just based on an arbitrary personal goal of getting back to 100K? So I think most of you are going to understand this, but shouldn't you be considering other things? Like, what is the market doing? It comes back to, the more sinister version of this would be like a stop loss, right? It's like, okay, whoa, this trade's not working. I'm going to cut this trade when it comes back to my entry. Well, what does your entry have to do with anything the market's doing? The market doesn't care about you. It doesn't care where your entry is. Why are you making a decision? Why are you betting your future on an arbitrary goal of getting out of a trade at your stop loss? It does not care about you. You should be paying attention to other things. Like, what is the market doing? If I'm long here on Doge, and this happens, I take my stop loss, anything can happen from here. This price could rally. The moment I say here, I'm not going to cut this trade, I'm at a loss. I'm just going to wait for price to come back to my entry. I'm going to avoid taking the loss. I've opened myself up to this. So what am I doing now? Okay, well, I'm not I'm not going to cut my trade at this big of a loss. I'm at least going to wait for it to come back up to my original stop loss. Oh God. Okay, if we bounce it all from here, I at least need to recover this, right? I at least need to why does the position I'm in, why does that have anything to do with my decision process? Just delete my position? Look at the market objectively? I don't care about where I entered. And in some ways, this is kind of a more advanced concept. You don't even care about where your targets are, where your stop loss is. You could stop out your trade. So let me just make this a little bit more dynamic. This is a downtrend. I'm not saying that this is how you have to define trades and how you have to manage trades. I'm just giving it a more dynamic example. You're in this trade. Price comes down, takes the lows, rallies straight up, and you see this happen, and you say, you know what? I want to time it a little bit better with this horizontal. I'm going to cut this trade here, and I'll reopen it. I'm going to lock in those profits. I'm going to reopen it if we can break out of this downtrend. And otherwise, I'm out of this trade. I'll consider reopening it on a retest and a breakout of this downtrend down here, or a retest like this. And if there's really a lot of strength, I maybe will sacrifice a little bit of my, add a little bit of risk, sacrifice a little bit of my profits, and just trade it wide. But I'm getting out of this trade. I don't care. I don't care that my targets are way up here. I don't care about anything. I care that this downtrend is not breaking. Maybe I'm long from down here for whatever reason I'm long. This is probably the 786 into this wick. Perfect. I eyeballed it. All right. You're long from here and you're just saying, you know what? I'm in this trade. I'm running at 3R, 4R, whatever it is. I really want to hold this towards a breakout. Again, I'm not saying that you have to manage your trades on this time frame. I'm giving a dynamic example here. And I don't actually care. It's not about where my stop is and saying, well, my trade's not invalidated. My targets haven't been met. I'm going to close this trade here. I'm going to lock in the 3.7R. And I now have those profits. So if you're trading with a $100 account, I have $3.7 of profit. I have my profit. If I want to add that profit back in to a position and just be in the exact same position, exactly where I closed it essentially, but on a break of this, then I'll do that. But if this doesn't break, I'm out of the position because I don't want to be in this trade if this downtrend isn't breaking. And so now we're taking this a step further and we're saying, again, I'm not saying you have to manage your trades on this time frame, but we're saying we're creating kind of static conditions for our trades, which is I'm in this trade, in this case 786, looking for continuation out of this downtrend, at least to test all-time highs, and my setup looks like this, and I'm kind of trading this as a range with this as a higher low. Bitcoin has bullish divergences, not looking for this low to get taken. I'm just forming the kind of on-the-fly thesis. I want to see this downtrend breaking. Willing to trade into that 786. Just creating the random thesis. But you're also looking at this and you're saying, this is all an idea and it might work, but I also am looking at this as a downtrend and I don't really care that my trade's not invalidated because I can just open a new trade. I care about what the market's doing, and we're not breaking out of this downtrend, and so I'm just going to close my position. And maybe I'll compound those profits into another position. Although in this case, I think it's kind of prudent just to say, if you got this exact setup and you traded this again, you keep the 3.7R, you put another 1R, and your 2.7R in the green, even if this trade doesn't work. But anyways, just a more dynamic approach. Ultimately, you can't observe everything and interpret everything in a meaningful way that's happening in the market at every given moment of every given day, and you can't manage trades this way. But your goal is to observe what is happening and make reasonable decisions and structure trades around what is happening, and not get too caught up in your personal goals or your dreams, right? Because the market doesn't care. And this, going back to when I mentioned that if you're compounding 5% a week off a $9,000 account, you'll be at $1.6 billion. The market doesn't care if you do that. If you generate that type of consistency and results, and I personally believe, I believe that is possible. But but I don't believe it's reasonable to expect to do that. I don't believe it's reasonable to expect to be the highest, one of the most performant, or even in the most elite performant traders as a new trader. So that's why I would say it's not reasonable for a new trader to expect to be on a trajectory to turn their, $5,000 trading account into a $1.6 billion in 5 years. But does that mean it's not possible? No. I mean, the market doesn't care if you do that. The market doesn't care if you find a way to consistently pull 5% relative to your account out of that trade, probably even up to that type of sizing. There's lots of liquidity in the market. You might not be trading altcoins, but the further away you get from your goals and your dreams and your trading, hoping, wishing, praying, and just objectively analyze what is and is not happening, account for. So I actually wanted to give this example, but it's kind of too much to write down, so I'm just going to do it here. So I gave the example of the trader who just longs every level, right? I'm just gonna, I'm just gonna create probably made this a little too tight. All right, so this trader is going to take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 losses if price runs down to these lows. And they're trading all of these setups something like 14R. And they're getting obviously bigger and bigger and bigger and bigger as they go, right? Because the targets remain the same. Targets are kind of fluid in this case, because it would be price discovery. All right. What about if you typically are risking 1% of your account on every trade? In this case, the stops are almost all precisely 1% away. What if you're risking 0.25% on these setups? All right, so what if you're saying, I typically am risking 1%. I want to long everything in here. I'm going to risk 0.25%. So these are 3R setups, right? 3R, 5R. They're 20R setups, but you're only risking 0.25%, right? So you're not making 20R off of them. You're making 5R off the 20R setup. Or you're making 20R, but your sizing is so small that it's the equivalent of 5R. Why might you do this? Well, would this make you, and I'm not saying this exact idea, but would this make you maybe a more dynamic trader than the person who only has the ability to put on risk if this happens? They see the bullish divergences forming. They see this potential idea of a higher low, but they're saying, I'm not comfortable trading into this. It's just too choppy. It's too, like, I can't trade into this price action. Even though there's a lot of bullish ideas, it's just, this is like, I'm not comfortable trading into this, right? I'm not saying you have to take trades you're not comfortable taking. But is the problem the level, the price action, the idea, or the risk, right? Is there a way to get comfortable with the risk and say, you know what, I'd be willing to put a quarter percent risk into a setup like this, and then maybe this level as well. So I'm gonna risk 0.5% instead of 2%, 0.5%, trading the higher low ideas as tighter setups for something like 3 or 4R. And then if I get this sweep of this low, I'm going to put my full 1% risk on and trade this as a 7R. So I get 3 or 4R of exposure on a couple setups here for a 0.5R risk on lower high setups, higher low setups. And then if we sweep this, I'm going to get my, but I want exposure here. And so what I'm saying is, there's more than one way to skin a cat when it comes to structuring trades, which is a lot of these tight setups. You really, in my view, like it's like a XRP in a trending environment, you really should be looking. I'm not saying you specifically. I'm just saying a trader looking to trade a trend really should be looking to put on risk into the sharp trending retracements in a strong uptrend, because those are your setups in a strong trend. Now, if you misallocate the idea of a trend, you could get punished, but you can also offset that by just taking smaller setups in terms of risk, but getting some exposure. And maybe instead of trading as 100R, you put on 0.5% risk for 20R. I would just say this, like, there's so many, you could kind of define the market as trending environments, strong trending, sharp pullbacks, sharp shallow pullbacks. You know, maybe you're getting these kind of ideas. And you can flip these trends, downtrends, and then ranging environments. And ranging environments, this is one of the reasons I like trading longs at support and shorts at resistance. Ranging environments can look like trending environments. And they can turn, obviously, eventually, usually turn into trending environments, whether uptrends or downtrends. And if you're trading a strong trending environment, you need to be able to think of ways to put on risk into the trend. Better just to use some live price action here. And cut the trades if the trending environment starts breaking down. This is ADA. And if you're in a ranging environment, again, it's really hard to call this a ranging environment. Eventually the trend will reverse, and maybe it already has. We don't really know, but I would just say it's hard to say that on something like ADA here. If you're in a ranging environment, and obviously, again, ranges form within trends as well, right? This is the start of what looks like it's going to be a ranging environment. There's internal ranges inside of these trending environments. You need to look to take profits into the highs of the range. And you can hybrid ranging setups into trending setups. You take profits at the highs of the range. Maybe you add back at the middle of the range. Maybe you don't. Take profits, lows of the range, highs of the range. Let the rest carry for a potential trending setup. Okay, I'm gonna hammer out a couple more of these quotes. Because I just think they're so great. And if you haven't watched that series, definitely get to it. Pop into the Discord and leave your takeaway. Emotional pain is the market's way of letting you know you've become disconnected from the probabilities. So if you are feeling any emotional distress from the market, you're becoming disconnected from the reality of the market. The sooner you recognize the market for what it is, the easier your trading is going to become. You're not expecting anything from the market. The market doesn't owe you anything. There's no specific outcome. I'm not expecting. What I'm observing here is that we have super aggressive selling getting absorbed on Bitcoin, giving us big bullish divergences. I've studied order flow for long enough and look at it every single day to know that probabilistically this leans towards higher, not lower. And so I'd be interested in long setups, but I'm not angry at the market if price goes lower. I'm just going to manage my risk around this. I'm happy for the opportunity to put on trades, but I'm going to just manage my risk and just expect something's going to happen. To achieve consistency, you must believe in uncertainty while still being decisive. So obviously this type of confidence comes with time and experience. But being decisive as a trader is incredibly important. But you have to be decisive while you are accepting and understanding that outcomes are uncertain. So I'm not going to take the trade here on ADA that I got stopped down on up here, or take this trade if it comes, because I don't think the outcome is uncertain. I can be incredibly decisive about entering and exiting my trades, cutting my trades at losses, holding my trades higher, while being completely uncertain about what the outcomes are going to be on any individual trades, because I understand the broader ideas that I'm trading towards. I like this quote. It's kind of something I've already said, but if you expect the market to give you anything, you've already lost. If you're expecting anything from the market, you've already lost. Hoping, wishing, or feeling entitled to a particular outcome are emotional traps that destroy traders. I would say Doge looking kind of bullish here. Wouldn't be surprised to see this. Maybe even no retest. Come back up towards the highs. Maybe put in a higher low, take the lows. I expect nothing here. I expect this trade or this price action, this breakout to either occur and hold or not to hold. If I was going to trade a breakout here, first I'd wait for the breakout. I would trade aggressively, probably into this trend line breaking out. And I would even consider sizing for a half loss and just cutting if there's no follow through on a retest. And if this happened, I wouldn't care. I've traded this setup many a times. Ideally, you just see a strong continuation. And I'd be willing to take profits into these highs on these signs of weakness, or expect nothing. If price breaks down, I would trade the lows of the range. I like this quote: when you let go of the need to avoid loss, you free yourself to trade with clarity and objectivity. Why not? You know, I mentioned this Pepe trade from earlier, and that I'd just taken a loss on ADA and Doge, and then I took this trade, right? Why not take this trade? Like any just as a general question, why not take this trade? The only reason is that you don't think it's going to win and you're afraid to take a loss. Why? And that just can be applied to any trade. Why not take the trade? Why not take this trade on Bitcoin? I shared that idea in the Discord. I'm not saying it's not about the specific trade. I'm saying why not take any setup? You have big bullish divergences, prices coming down to the GP, the POC. Whether you think that's statistically important, relevant, it's not the question. For a lot of people, the answer is going to be, I don't want to take a loss. I don't want to take another loss. I just took a loss on Bitcoin and I don't want to take another one. Okay. Well, you're not objectively analyzing the market, potentially, if your reason for not wanting to take a trade is you don't want to take a loss. If you weren't worried about taking a loss, would you take this trade on a paper trading account? Well, yeah. I mean, it's a good setup. I'm just mimicking what someone might say. The setup makes sense to me. I would probably put the trade on a paper trading account because I'm not going to take a loss, and it looks like it could be valid. So, but what does you taking a loss have to do with whether or not you should take the trade? What is being afraid of taking a loss? So this idea that as soon as you stop trying to avoid taking losses, you have the clarity of mind to objectively analyze the market is pretty powerful. So actually one of the reasons that I highly encourage people to paper trade, because you should know what it feels like to trade without the fear of losing. It feels very different than trading with the fear of losing. Most people are going to flow in and out of trades a lot more effortlessly. They'll be closing trades when there's signs of weakness that they would have round tripped in the past. They'll be entering trades they never would have. They'll be cutting trades with crisp risk management where they might have let those runner losses run against them. And people will say, well, yeah, but as soon as I go to live trading, I just fall apart, and so it's not really valuable to me because once I have the emotions, I can't execute the same way. Well, first, figure out if you can execute that way with paper trading. If you can't even do it with paper trading, then you're not going to be able to do it with all the emotions piled on top of you. But what you might find is the experience of doing it paper trading will change your relationship with the market, where you'll say, whoa, I can see how this is supposed to feel. And when I'm paper trading and I'm coming up with these ideas and these ideas, I take this loss, I have this win, I have this loss, I have this win. It's starting to feel effortless. It's really starting to feel like I really don't care. And it's not because I don't have money. It's because I'm seeing the outcome of my trades. And yeah, initially it's just maybe I was executing them well because I wasn't afraid of losing money. And then when you go to live trading and you start to feel that tension of fear and emotions influencing your decisions, you can recognize it, right? You can say, okay, I might be feeling like, oh, something looks wrong. I don't like the reaction here on this 30-second wick. And I got to get out of this trade. And you're looking at your P&L and you're thinking, oh, I don't want to round trip another trade. I just round tripped this other trade. This is starting to look kind of weak because the momentum shift happening. You're not going to start making those types of trading errors. You're going to say, no, this is something I never experienced when I was paper trading. I can understand that something is wrong here. Something is wrong with my my emotional integrity in this trade. I think that's powerful to know what it's supposed to feel like. And so some practical things somebody could do is, if they've had really consistent with results with paper trading and they feel like they have a well-defined system for trading, and they start feeling things fall apart when they go to live trading and they can't objectively analyze anything that's happening anymore, just cut the size of your trading account back to almost nothing. So go paper trading to trading with a small amount of money. If you're finding success there, then you're trading with a little bit more until you build up to an account. But if let's just say that you just inherited $100,000 and you make $20K a year, and that's it. That's your life savings. You are not going to be able to trade a $100,000 trading account having just inherited that money, even with 1% risk. You're going to run into 3 losses and think, oh my God, I just lost $3,000. I lost $3,000. That's more than a month's income for me. And I lost that in one day. And do you think the integrity of your trades isn't going to fall apart? But imagine, even if you had a consistent track record paper trading. So maybe it might be prudent to say, what if I just start with $100 and see if I can, okay, I lost $3, I made $5, I lost $3, and then you put a track record of trades together and say, okay, I replicated my paper trading result. I'm going to go up to $1,000 now on a trading account. Yeah, I have this $100,000 sitting here, but I'm more concerned about protecting that capital at this point, because I know that if I can reproduce my paper trading results with my $100,000, then I'll have a long career as a trader. I'll be able to retire from my job quite quickly. These setups, these trendline breakout setups, can get kind of choppy, but they are kind of clean. they can be a lot cleaner on the retests. It's kind of similar to these on ADA. These shallower breakouts, retest. But this, what I like about this particularly is it's not like this sharp, impulsive, wiki structure. It's like this grinding structure. They don't always play out. I mean, there's a few examples in here. But it's not this, right? It's not this impulsive structure. It's this. All right. We'll end with one more quote. Then I'm going to sign off for the day. Well, I'll be in the Discord, but I'll sign off the live stream. The moment you stop trying to recover from your losses is the moment you start to succeed. I think that can be applied not just to individual trade losses, although it's a powerful concept, right? Again, it's changing what you're doing to meet your own personal goals, which is, I need to recover. Let's just say that you've had, this is actually a really common thing that I run into with members that join the Discord. I'd say not really, but relatively common, especially in some private conversations. They've just got torn up by the market. So maybe they've been trading for 6 months, 10 months. They've lost 80% of their capital, and it could be meaningful capital to them. They had $10,000 and now they're down to $2,000. And they knew nothing about trading and they got absolutely smoked. And they start learning some of this stuff and they'll say, I'm going to start applying like risk management and all these things after I get back to recovering my losses. Like, I need to at least recover the $8,000 I lost, and so I need to take on more risk. And as soon as I'm back to that, then I'm going to start doing proper risk management. And so the point is that's literally a death sentence to your trading career. Because what you're essentially saying is, I'm going to 5x my trading account with no principled approach to my trading, no discernible edge over time, just keep gambling my money away with essentially a guarantee at losing it all. And once I 5x my trading account doing that, then I'm going to start implementing sound trading practices. And the reason I'm doing this is to recover my losses that were generated from me doing that. Once I recover everything I lost doing what I'm doing, by doing more of what I've been doing that generated the losses, then I will start doing the right thing. It can be applied on an individual trade basis too. I just lost 3 trades in a row. I'm going to increase my risk. And once I've recovered the losses, then I will start using proper sizing again. It's a death sentence. Don't try to recover your losses on any time frames. That could even be, somebody who says, well, I've been trading for 2 years. You can just apply this to any principle. I mean, there's literally people that will say they've been trading for years, like 3 years, 4 years. I haven't ever heard of any of this stuff you're talking about. Like, I haven't heard of just the general concepts of proper sizing, risk management, and they feel like they have to recover for their lost time, and they try to do that with they're trading, right? So like somebody would say, for example, somebody will say something like this. They'll say, I've never heard of this idea of only risking 1%. I've never heard of this idea of how much money you can make compounding those returns. I've never heard of these expected loss streaks over large series of trades. I've been trading with like 20% risk per trade, and now I'm so happy I've heard of this, but because I've been trading with 20% and it's really had a devastating effect, but I still need to recover, or my trading counts, I'm going to go down to 5%. And that's pretty good because I was at 20%. I'm going to 5% risk. I know it's not 1%, but but it's like, well, you're going to have 100% drawdowns. What's your win rate? I don't know, but maybe if they could figure it out, it's 50%. All right, well, you're going to take 100 trades and you're going to run to 11 trade loss streak pretty frequently, even if you execute it perfectly, which you won't. Okay, I'll just answer a couple questions. Somebody says, asking about Pepe. One question on your Pepe trade. Nice one, by the way. Do you consider stop loss to break even? It's kind of, I'd say it's somewhat irrelevant at this point. Like, I'd say no. The trade's a little lower, but I'd say no. The idea, I like to put my stop losses at break even after I've taken profits off them. And that's a little bit like, sounds subjective, but the idea being like people do it way too early. So they'll get break even by this. This will be their entry and they'll say, okay, I'm moving my stop to break even. At some point, you want to be long here, maybe you get a retest. Everything here, that's a long, it's the 5-minute chart. Price starts trending away from this. Maybe you get a retest of this trend line. I mean, you kind of want to start seeing price move away from the level at some point, but if you're going to break even this, then you also have to be willing to be prepared to re-enter it. It just doesn't really make sense to remove the risk with a break even here, in my view. This happens, maybe you're looking to take some profits into this, and at this point, this setup is sort of played out, right? But I don't really see a reason to break even that. You could, right? But you have to be okay with getting stopped out at break even with just this happening. So like the best way to put it is this. Forget being in the trade. Forget getting out break even or at a loss or at a win. You just kind of ask yourself, like, let's say you're going to sleep right now. Would you want to be out of the trade if this happened? You just came down and overnight, retested the level into the trend line, tagged the lows again. And if the answer is no, then don't put your stop at break even. Because now you've gone from just longing the GP to closing your trade at the level. I don't know. That's my view, but I'm going to be honest. I've spent very little time with ICT concepts. Like, obviously familiar with them, but I guess I would just say, like, I don't really have an opinion. I don't really use them at all in my trading. I probably am not even aware of all of the potential concepts and how they're applied. I would say this, there's something to be said about I've probably done it a little bit more than I probably could have, but there's something to be said about not really caring what anyone else is doing or passing too much judgment on it. It's like there's a lot of things that I probably have some opinions on that are probably perfectly reasonable and they work for some people. I mean, there's just a point where it's like you just have to stop caring what everybody else is doing. There's no time. I'm worried about what I'm doing. Yeah, I know the ICT. Someone says it's what everyone else does, but with different names. Yeah, most things are, right? It's like there's a reason that there's a fib tool in the. I mean, there's a reason there's a trend line tool, and it's called a trend line, and there's a reason there's a parallel channel tool, and there's a reason there's all these tools and a volume profile tool. Like I didn't invent these concepts, right? I didn't invent Elliott wave concepts. I might be applying them in a different way than many other, or maybe every other trader's applying them, and maybe there's traders that are applying them in the exact same way. I mean, there's always going to be some subjectivity. A lot of people will rename or rebrand kind of common concepts. And I know there's kind of like a new school version of everything too, where it's like it's this concept, but it's refined and tailored into these different ways, or a hybrid of different concepts. And I don't think there's anything invalid about any of that. It's just, I can't really pass too much judgment on things that I really don't know. I'm just making assumptions, right? No, I haven't taken profit on Pepe trade. I mean, the Pepe trade is I'm actually trading this towards new all-time highs, but definitely up into these highs. It's a range trade essentially. Like I'm open to a breakout, but trading towards these highs and these highs, depending on what price looks like there. But for me to capture the edge off of this trade, it requires me to hold this trade through the duration of the idea here, because I can't really be turning the 8, 10, 12R or breakout ideas into 1R trades. Just scanning through the comments here really quickly. I don't think this is a direct quote. I'm kind of paraphrasing, but the quote's something like, "No single trade or series of trades is going to define your trading career." And that's another kind of pitfall that new traders are going to fall into. Like they're going to see something like these Doge ideas in this uptrend, and they're going to start thinking, and it's sort of to escape from like the emotional baggage that they have associated with trading. They're going to start thinking, if I could just go all in on this trade once, it would change everything, right? It's like if I could 100x my $1,000 life savings into $100,000 position and hold for a 230% move, one trade could just change my life. And so what they start doing, and maybe it's not 100x, maybe it's 50x, one trade at 50x, whatever it is, or 3 trades at, 35x. And then their whole trading career becomes chasing one trade defining their entire trading career. And instead, they have an entire trading career of being a loser, chasing one trade. And so that's the way that I think most commonly new traders misapply something like technical analysis, which is it's gambling on an outcome. You're not trading probabilities. You're willing to gamble on an outcome of price going up. This trend line and this and this. It means that, and we have this Elliott wave idea, and it means that price is going to do this, and I'm going to gamble on that outcome with my life savings. I'm going to blow it up, and then I'm going to spiral and put my next paycheck into the trading account and try it again and try it again and try it again, and then maybe one time I'll be like, oh my god, I just hit 5,000. I hit a $5,000 trade. I'm gonna close it, and then I'm gonna go all in short on this, and this is probably a range, and they're just gonna compound that error, right? And they'll actually never make their $300,000 trade that they're trying to make, because their life savings is in every single trade. So don't try to define your trading career with a single trade, or B, even a series of trades. Some small, this week I'm going to compound 8 longs. I'm going to 10% risk into each one of them. Just get away from that. Your trading career is going to be defined with a disciplined approach over years and years and decades and hundreds and thousands of trades. No single trade should really ever matter. Someone says, how much money have you made? Someone says he's made infinite money. I made a couple $100. So if I compound that for the next 25 years, all right, guys. Do a quick scan here. Probably update some charts in the Discord a little bit later. I think Bitcoin's probably pushing towards all-time highs as the more likely outcome off of a higher low, but we'll see. Let's get after it this month. I'll open up the members Discord for the week of Christmas too, so everyone can hang out. Won't obviously be as active there, but let's have a good month, and we'll all hang out into the new year, and then prep for a big year ahead. 2025.